Everyone ready for NFP? I know it stands for the non-farm payroll, but here in face with all of you Eagles, I call it no frickin' problem. Everyone with me? The NFP is no frickin' problem. Give me a Y if you're with me. Also, here's some good trades right here on the New Year offer. For those of you that haven't joined yet or missed the last promo, it's a 2-for-1, buy one, get one free, and big discounts on the semi and annual plans. This is the best trade you'll make in 2018 because it's going to prepare you for multiple trades through the year, in my extremely accurate and humble opinion. Okay? Everyone with me? So do it now and create good karma. Support FACE by joining. FACE is entering its 9th month, 10th month, I don't know. Feels like 10 years. All right, let's get to the markets here. So I'd say the major event was the yen breaking out going into this number. You know, once we took out this 1290, it could pull back, but I can't fade the yen now. You know, perhaps we're going to 116, 118. Giuseppe Bazille, when he was on, talked about 113, and then the next target after that's 116 to 18. So I can't fade this yen here. I'd be more looking to buy breaks. And with that happening, I think we're finally in a position where we could get a break in gold. I'd love to see a number where they sell the dollar off and gold makes one more high up towards 1328 or so. We get a nice pop here. So my ideal scenario is to buy into dollar weakness today. Oh, thank you, Luca. Looking forward to your interview next month. Yeah, this goes to everyone in the house. Happy New Year. May it be a great year in every way, not just your trading. Trading is what we do. It's not who we are. We have other things in our lives that are probably at least as important, like our relationships, more than our P&Ls. So thank you, Luca. So with that being said, I'd also, you know, I think the Aussie broke the record by being up 14 days because we were up yesterday. Same type of setup in Aussie as gold. So if they try and sell the dollar off and the Aussie pops, I'm looking for pullbacks, not the beginning of a bear market, but pullbacks in the commodity currencies and the commodities. Maybe Steve Volge can. You know what? I'll make a plea for you, Robert. Okay. You've been away for a while.
The answer is good morning, Dale. Good morning, everyone. The answer to his question is yes.
Okay. See, my plea worked. I know, look, I work with generous people, you know. Of course, we're business people, businessmen, but anytime I've asked Steve or Blake or Stelios to bend to accommodate the public or someone, they've never disappointed me. So there you go, Robert. Welcome back.
Hey Steve, and good morning, Dale, and
happy
NFP.
Everybody.
So how do you clarify that, or how does that happen for the older customers, Steve, that have been around?
They can just go ahead and participate by taking any of the new plans, but that does not apply to the monthly plans. So older users can take advantage of the offer for semi-annual and annual plans, but not for the monthly ones. That's only for new users.
So if they have 3 months left on, say, an annual, you just
they can
tack
upgrade,
on the other.
They can upgrade to the new one. Yes.
Okay. All right.
Sounds
There you
good.
go.
And then there
without losing, and since you're asking, we always want to be transparent in ForexAnalytix. So whenever a user decides to upgrade their plan, they always, in the invoice, they always get refunded of the unused days of the existing plan. And then, so they get credited that and then debited for the difference. So you can upgrade at any given time without worrying that you're going to lose even a single day worth of pay.
Well,
For one you're already on.
That should be on the site.
Thank you. And you know what, Steve? Let's take Monday as an opportunity to talk maybe a little bit more in depth on how that works. For those people that didn't get it, that are not quite understanding it. It is non-farm payroll day, and I want to make sure that we get a good amount of analysis in. But just to clarify to our existing users that that they can still take advantage of it. And like I said, today is non-farm payroll day. I've got about 20 minutes or so to cover some markets before I gotta bolt for NFP and get ready. Dale, if you don't mind if I take over.
Yeah. No, fine. I mean, I don't know how you feel, but if we get a weak number and they sell the dollar off, I think there might be a fade on buying into dollar weakness on this number.
Yeah, I actually do too. But let's first of all, let me talk about the yen, because if you guys don't recall, the dollar yen really made my fourth quarter last year being short up here at 113.80. Okay, now we're back up here again. Now you had mentioned that you think the dollar yen's done. I don't. I want to be very clear here.
Well, I think it's going higher.
Yeah, well, I'm not quite there yet.
Okay, you still fail from here, I see from your chart.
Yeah, so this is a weekly chart of the dollar yen, just to understand where we're at, and I pushed out a chart of the of 2-year yields, by the way, a little bit earlier on Twitter via Bloomberg. But this is really, I think that if you really want to see the dollar yen break out and break higher, and just so you guys know, I'm going to be a very big dollar yen bull should we break above this 114, 80 level. I mean, that's where I go, okay, now we are definitely going higher. But we have the multi-year trend line does come in at 113. I had it at 75, but it's really, somewhere around, you have to say 113.75 to 114, somewhere in that neighborhood. You can't, it's hard to put your finger on it and say it's exactly here, because when you're dealing with a multi-year trend line, it's not as easy as just saying, oh, it's at this very pip. You have to use it as
20 pips tolerance on a line like that, right?
Maybe more. You got to give it maybe even a little bit more. Right? We could blast through 114 temporarily and then come off by the end of the day. So I'm just looking in this zone, and anywhere between 130. See, we're in a wedge right here. We're right at the wedge highs. This is today's high now, and where we're at right now, we can move all the way up to 113. 113.75, 113.80, and on a strong print, that's possible. And just so there's a lot of confusion out there. Apparently, Ivanka Trump tweeted something about 250,000 jobs were created. She was actually referencing yesterday's ADP number, not forecasting today's NFP. Just so you guys know, yesterday's private employment data came in at 250,000. That's what the ADP had reported. It's not what the Bureau of Labor and Statistics, the BLS, is set to report today. We did think it would be funny if for some reason the Ivanka actually tweeted that, and we did print 250,000 while we're expecting 190. But that's not the case. That's not the case. Anyway, and actually, what I need to do is I need to put an alert right here. Okay. So I need to put an alert for the dollar yen because I really want to be alerted below 112 and I want to be alerted above 114 or around 114. So for me, I think the dollar yen is still within this box playground. Okay, so on a strong number, can we rally past 113.50? Sure. You know, can we go higher than that? Sure. I think the dollar has a lot of room to move higher, or excuse me, very limited room to move higher because the dollar yen is capped here by this 13.75, and then also the euro dollar should be supported pretty well, well, while above 120. But even if we drop below 120, I think a move down to 119 and change is still possible. Okay, but I'm as Dale said, and I'm in agreement, on a weak dollar, I'd be more excited about buying the euro dollar. I was also reading something about reading something about from CityFX that we had an outside year in the euro dollar, and they're actually looking for 135 in the euro dollar going into 2018. I thought that was really interesting, an outside yearly candle in the euro dollar. Now, as I had mentioned the last couple of weeks and on the week ahead video, I think the euro dollar continues higher throughout 2018. I just don't think it's going to be a very pretty move, and I still think that there's a chance that we can hit today on a week. If ADP disappoints, and especially if the wage growth does not turn around, and remember, the wage growth is the problem right now. It's not so much the headline number. We're near full employment, so we're expected to keep in the 150 to 200,000 range. I don't think that headline number is going to affect the market too much. I still think it's going to be, as we have been looking at for the last 6 months or so, maybe even more, we got to look at the average hourly earnings, and that is expected to increase to 0.3% versus 0.2. If that number comes in weak again, okay, if it comes in weak again, we could seriously take on this 121 level in the euro dollar and maybe make it up to 121.70. And this is and that's the 50%. If you guys have lost sight of where that is and why that is the 50% retracement from the highs back in 2014 to the lows in 2016, just before the election. And then we're talking about we're closing in on a 50% retracement. Now, with that being said, there's only one way that I would even think about fading the euro dollar. It'd be that wage growth maybe comes in slightly weaker than expected, but we have a strong print in data, so our jobs print. So let's say we created 200,000 jobs. That means the jobs number is not bad. Just wage growth continues to be a little disappointing. So if the dollar does weaken on that, which is possible, really, because I think the market's really focused on the wage growth. If we do blast into new highs, as long as the headline number isn't extremely weak, then I would be apt to sell the euro dollar, above new highs. Just kind of a counter trend trade. But let's say that wage growth comes in weak. Okay, so let's say we post 0.2% on wage growth when we're expected 0.3%, and let's say the headline number is less than 100,000. I think we do break out, and I don't think we're coming back. So in other words, I think we're breaking above this 121 level, and I don't think we're going to be turning back around. That means I'm not fading it. If that makes does that make sense to you, Dale? I don't know if it made sense to you, if you're even, you might have stepped away from the desk. I hope it made sense to you guys and gals that are listening in. Now, the euro dollar still looks pretty strong. Hold on one second. Okay, this Squawk was just talking. The pound dollar continues to hold on pretty well. And remember, we're in a bull flag pattern right now. So if you oh shoot, I got my magnet on, hold on. Okay, here we go. If you look at the pound dollar, we are in a bull flag pattern, all right? So we are breaking higher, all right? And yes, it's been kind of a limited follow through. Is a lot of time flags are these, you know, when you're in an extension coming out of a flag, it's not going to be necessarily beautiful, you know, straight up like it was in the first leg. So, you know, that still takes us up towards 138. So I think the pound dollar still looks really strong. Now the Aussie dollar is extremely strong, but we have come right up into the 618 retracement, very overbought. Today would have been, if we close green, it'll be the 14th day higher, but the Aussie's showing a bit of a reversal right now, which makes sense. I mean, we're a little, you know, obviously stretched, very overbought here. You know, the Kiwi dollar is in a very similar situation. We're at a 50% retracement. It's you know, coming up against some resistance here. We, you know, maybe around 72 cents, but the Kiwi's been very strong. And by the way, I did close out of my New Zealand yen shorts and Aussie yen shorts yesterday. I took a loss on both of those. And you know, it was worth the shot to me from a risk reward perspective, because we were stopped right here and I shorted the New Zealand yen right there and I put my stops right above it. So, you know, it was worth taking the trade to try to catch a reversal. It didn't transpire. I took my loss, and thank goodness I took my loss yesterday, because it is continuing higher today, as all these yen pairs are. The other one that we have to talk about is the US dollar Canadian. Now the US dollar Canadian, this is a currency pair that there's a lot of, well, first of all, we've got Canadian employment today as well. So the Canadian employment, it looks that we're to create basically just a few jobs. This comes after an outsized print last month at 79,000. That means that the market is looking for a revert to the mean, if you will, in Canadian employment. If for some reason the Canadian employment misses expectations and we come in worse than expected and we create maybe only, let's say we actually lose jobs, the dollar Canadian could possibly bounce, especially if we get a strong US jobs data number. Now, I think the dollar Canadian's upside is fairly limited to 126.25. So in other words, if we get a rally here in the dollar Canadian, I'm still expecting this type of move. You guys know I've been looking for support in the dollar Canadian at the 50% retracement. If you look at the analysis in ForexAnalytix from the last few days, okay, and you go, the US dollar Canadian hit new trend lows, but the 50% retracement is at 124.90 level, and with the 4-hour RSI divergent, we could see a bounce there. That was 2 days ago. Yesterday, the loonie found support ahead of the 50% retracement, but traders may be looking at the 126.50 level to establish new shorts, as this would be a range retest. Or this is 2 days ago. That was 3 days ago. Yesterday, the US dollar Canadian hit a new trend low and is testing the 124.90 level, which is a 50% retracement as well. RSI is divergent, so caution shorts. Then as you can see right now, we've bounced off there. I've expected us to hit this 124.90 over the last couple of days. We've hit it. We are bouncing a little bit, but we're not bouncing a lot. Obviously, we need the reason to be long the US dollar Canadian, or for the, actually, let me rephrase that. We need a reason for the US dollar Canadian to bounce this morning. The reason would be a strong US jobs number and a weak Canadian number. You know, again, you have to look at Canadian here. I'm just going to pull up Forex Factory because it's easy to read. If you look at the outsized number from last month at 79 and 79.5 thousand, the market is expecting a revert back to the mean now. And if we put in like a big miss, like let's say we lose 25,000, let's say we lose 15,000, let's say we actually lose jobs and we do fall further in the U.S. dollar Canadian or in Canadian employment, then that gives the reason, one of the reasons for the U.S. dollar Canadian to actually rally from here and get a recovery rally. Again,
well, I've heard that realtors are being laid off because Toronto real estate's finally caving.
Yeah. I mean, but does that, what does that qualify for? As far as real estate data goes, I don't know. That's the question.
Blake, there is though another way to view this data. The market actually today has set the bar at a print that would be a 16-month low. So what I'm trying to say here is there is also a good chance that the market is going to print higher than that, right?
Yeah, I mean, I don't think the data is going to actually disappoint personally, but that again, I'm trying to outline the reasons for the U.S. dollar to rally.
No, I agree. I'm just saying, that would be a 16-month low, and given the recent data, I think a decent chance for a better performance than the market expects.
Yeah, it can be, but remember that number was very outsized on.
It was indeed. It was
in December. So, but let's couple that with strong U.S. data. So let's say the average hourly earnings comes in at it comes in at 0.3%, and let's say we do create 200,000 jobs. That's a solid number. So if we get a solid number out of the US and weak Canadian data, that is the excuse for the dollar Canadian to continue to rally. And that's why I think we have to keep an eye on the dollar Canadian. I think this is the currency pair that I'll be focused on mostly today. I've got a few cross rates going personally. I'm short a little Aussie through some crosses, but very small positions because I didn't want any dollar positions going into NFP, but the dollar Canadian is really where my head is at. And again, one other thing I guess I wanted to talk about too is remember the COT data. Let me pull that up for you really fast. And then we're going to get new COT data today, which will be good as of Tuesday. And this is Adam. And Dale, what's Adam's last name?
Adam Button?
No, not from Forex Live. From
oh my gosh, I forgot it already.
I know it's blanking me. Anyway, the one thing that also you got to think about with the Canadian is speculators are still very long the Canadian dollar. You can see them right here. That means that the spec market is expecting weaker dollar Canadian as their long Canadian currency futures. So if the dollar Canadian does rally from here, we could squeeze just from a positioning standpoint as well. That's entirely possible. So I think I personally I would love to buy the dollar Canadian. I need reasons to buy the dollar Canadian. I think the market is looking for that as well. So but we'll see. I mean, again, a weak U.S. data and strong Canadian data, and the dollar Canadian could be, before we see any type of bounce, that thing could be trading at 124. So I'm not going to go out ahead of NFP and start taking shots at this thing. I want the proof, and I think the proof will be out within 6 minutes. And with that being said, I'm going to pass it over to you, Steve.
Oh my. Okay, Blake. Have a wonderful trading day.
I've got to get my trade on. So you guys, good luck today, and have a great. Who are you interviewing today, Dale?
I don't have one today, Blake.
Oh, okay. All right. Well, hey, good luck, you guys, for NFP. Thanks everybody for joining, and Steve will keep you in good shape here as he covers non-farm payroll. Going through that.
Yes, definitely. Steven Stelios, actually, he's going to help me a little bit with the data as we will be covering the markets. Obviously, as always, the first market we're going to be watching for a reaction is going to be the USD yen and the treasuries. We also have a few instruments that are currently on very interesting levels. Silver is one of them. We should also see, for example, if we get a strong print, we should see a reaction from here because it's a very strong level after a very strong move higher. The Aussie and the Kiwi are in a very good position to roll over. Personally, I almost top-ticked it yesterday and got a 1/3 of my regular positions on just above 78.60 in Aussie. But to be very honest, I'm secretly hoping for a little jump higher to get people more bullish. I've increased my position since then, by the way, to 50%. But I would really love to see an initial reaction higher for Aussie, because then I would definitely increase my position to full size. So
not a secret anymore, your hopes.
Yeah, true. But I mean, despite already being short, I would still welcome, a jump higher for 1 or 2 more days. Let's say I would love to see a high on Monday or tonight, something like that, or intraday and then a reversal once again. But I do feel that the Aussie has very, very, very limited upside left, at least a retracement down to the 77.40 level, which has been extremely important for the market in many, many occasions, is going to be a good area to be retested, even if it will end up resuming higher from there. So I really like this trade. It's the first trade I initiate in the year. I'm excluding gold. In essence, I almost closed it flat. I kept it for very little. So it's the first real trade that I had planned that I'm initiating this year. So let's see how the year is going to start for me. Other than that, let me see. We have 3 minutes left. Okay, let's see what other markets are at interesting levels. Obviously, stocks are extremely well bid. This is the 4th consecutive days that the US futures are up, even pre-market. I'm monitoring a little channel here, and a little upward channel, which coincides with the 261.8 at 27.44. That's an area that, that's somewhat interesting. Obviously, the momentum is incredible. I mean, we literally didn't have any real correction since August. And when we say real correction, even August correction was like, let me see, roughly less than 3% actually, which is ridiculous. But we haven't even seen that since August. So the momentum is incredible. But this is obviously unsustainable in the longer term. We currently have a record RSI on the weekly chart. You can see that this last part of the move has been parabolic. It has even penetrated through this ascending wedge. We are once again about to test very overbought levels in this pitchfork. So it's a good opportunity to perhaps even see some type of a small scale reversal in stocks today. So these are the things I'm mostly monitoring. As Blake mentioned before, yesterday we tagged almost to the pip the previous high in the euro. I remain bullish the euro in the medium term. Of course, some short-term retracements depends on what happens with NFPs today. Is always a possibility. Same thing applies to the cable. And Blake mentioned it before, but it's going to be very critical. So, you have 2 areas to watch here in the USD yen. One of them is the long-term descending trend line, and the other one is the possibility of a head and shoulders formation if it actually turns lower. Okay, let's see. We are a few seconds before we get the data. Stelio, let me know for whatever data I missed after the initial one.
Of course, I'm here, my friend.
Okay.
All right.
Now let's see what we get. We should have some music playing, where.
Drum roll.
Yeah.
Okay, let's go. Hourly earnings in line. Oh, payroll
big
is weak,
miss.
but
148K.
revision is big, is 30K more roughly, so the revision is positive.
Yes, but let's see
Canadian
earnings.
Canadian very, very strong.
Okay, so let's see the USD CAD.
Yeah, that should be going.
Oh, I hate what they've done with TradingView. If you type fast nowadays, okay, yep, Canadian is plummeting actually. Canadian is currently testing.
Unemployment expected 6%, came in at 5.7%.
Ooh, employment
Yeah, so
again, a huge outside number in Canada, 78.6 with expected being only 2K.
2K, yeah.
So it's a huge beat, second time in a row, a huge beat for Canadian data. And
trade balance was weaker than expected, but that's not going to really
but that's
much.
huge data. Yeah. And actually the Canadian is about to penetrate a very important horizontal support area here. And the next target is 123.90, the 61.8. But honestly, with this kind of data, it looks tough that this move is going to stop. Now, on the other hand, we have a little retracement in the USD yen, but in all honesty, I don't see much of a dollar weakness spilling over the markets at the moment. Like if you see here, we have I mean, we do have, of course, the dollar weakening, but the reaction is quite muted. Stelio, what was hourly earnings? How did they come?
It came in line, so expected to tick up.
It came in line, okay, so that's Canadian unemployment by 0.3% from 6% expected to 5.7. Stelio, participation rate in the US, how did that come?
Flat, 62.7 as last month.
Okay, as it was, okay, so nothing changed with that.
Other than that.
So yeah, huge US Canadian data.
You know, guys, I talked about if we had some dollar weakness on the number, it could set up some opportunities to fade. I wouldn't go all in, but looking at silver and gold here, gold not making a new high, Aussie testing a new high, that these could actually be decent shorting positions. I'm not saying that it's going to turn today. It could turn early next week, but maybe to have a piece on during this dollar weakness might be a nice counter trend trade.
So far, with the exception of obviously USD CAD, and that due to extremely strong Canadian data, the dollar weakness as a reaction of the weak print has been extremely muted. I mean, the bare minimum you would expect. It might be partly to the even higher revision of the previous numbers, of November numbers, or it might be that the market, obviously, since we have had a very strong streak of very good data, it might simply be even ignoring, a weaker print, because don't forget that NFPs can be volatile. As we see in this case, they can be revised quite a lot, quite significantly in the upcoming months. Either way, 150K is not really a bad print, regardless of the expectations that were around 185 to 190. So to be honest, I don't really find it surprising that we're getting a muted reaction. So USD yen is like just barely 20 pips below the highs. As you said, Dale, Aussie is approaching the 61.8. Personally, I would love to see it up 1 or 2 more days and see a reversal on a Monday, for example. It's going to give me a good opportunity to add that around 79, another half position.
Your secret hope and wish is manifesting.
Yeah, that's actually the only reason why I didn't go in with a full position, hoping that we're going to jump higher today. Okay. Kiwi is now approaching. It's actually very, very close. It's penetrating the 50% fib. Of course, it's very early in the day, so what seems to be breaking above this level now at the end of the day can be something completely different. But it's also approaching this descending channels resistance. We broke briefly below this channel, if you saw, but came back above it. Within it, I mean, so we're nearing its resistance once again. As I said, USD CAD has penetrated my horizontal support zone, and it is currently testing the 61.8. In all honesty, I said it several days ago as well. Any rebound, and I really feel bad for missing out on this trade because I was really expecting the USD CAD to resume lower. but you know, I didn't want to take any positions at the very last few days of the year, and I was expecting, you know, another push higher. I want to participate in this. I was hoping for a rebound towards the breakout area, a retest of the channel's support as resistance. As it seems, it's not giving us the opportunity. At least I'm still holding part of my USD NOK short position. And let's see how USD NOK is doing. It's doing good, actually. Next support for the USD NOK is at 8. 8 has been a very significant level, even in the past. If we zoom out, you can see here, it had been the market's floor for a very big period of time, a couple of years, if I remember right. So at 8, I'm offloading the rest of my position. So let's see what else might be moving. The DAX has been very strong today, by the way, so the rebound is resuming, but it's not the time to talk about the DAX. Kiwi yen, CAD yen is actually ripping, which makes sense, of course, given the fact that yen has been very strong today, very weak today, and the CAD, after the Canadian jobs data, oh, there it is, approaching the highs. If you remember, we were talking very clearly about the possibility of this being a bull flag. We broke above it. It seems that we're now accelerating. Most likely than not, this is a third wave of some kind. We never got that pullback, any type of pullback. If we get the opportunity back down to this area, to the 89.50 to 89.70 area, probably a good buying opportunity for the CAD yen. More or less certainty that we're going to push to new highs from here. What else do we have? Oh, let's have a look at the bonds and how they're responding. So let's have a look at the 10-year. Okay, nothing to write home about here. The 10-year has broken below this triangle. It has found more or less some kind of a floor at 123.60. I'm viewing this as another short-term consolidation before pushing lower. Once again, I really don't have currently any bullish interpretation for what we're seeing. So my main scenario remains, you know, a bearish one. I do believe that the likelihood of a break lower from this 123.18 low to multi-year lows is, you know, a very high probability scenario. And you know, a little consolidation is not going to change my mind about that. Yep, USD CAD breaking even below the 61.8. So this one is a goner. I remind once again here that I showed it the other day, that if you look at the weekly, somebody should definitely be expecting a push to new lows, right? This was a rebound. I would really want to see, my targets are anywhere between 115.65 and 114.27 for USD CAD. So I'm expecting the weakness to not to be transitory, but to resume for at least, you know, a period of time towards, you know, new multi-year lows. Actually, we might go all the way to test the 2015 lows. Actually, that's my long-term view for the USD CAD. Let me see some questions so we can go over them, as long as we don't get anything else moving dramatically, which doesn't seem to be the case. Besides the USD, we moves. Yeah, know that we had NFPs just by looking at the stock market. I would never ever guess that something happened. So stocks are completely unfazed once again. Okay, so let's go through some questions. Stelio, if we get some movement while I'm covering questions, just let me know. Okay.
Yes, of course, my friend. Yes.
Thank you. Abdul is asking about, you know something, Abdul, thank you for giving me the opportunity to have a fast view of a few of the exotic currencies, because I think they produce some good trading opportunities. First of all, the USD Turkish lira, as you see, is currently correcting lower. This might end up being a triangle, but it also might end up being a channel, right? Regardless, 363, quite an important level to watch in this market, okay? Because this, as I said, might end up being a channel like this, okay? So a corrective move lower. Obviously, the Turkish lira remains one of the weakest by far of the exotics at the moment. So, in my opinion, unless you're looking to be buying it on pullbacks, and you're just looking to find exotic currencies to be short the USD, you'd rather choose other pairs. For example, the South African rand has broken to new lows, and it's looking extremely bearish. This was a consolidation, and we seem to be resuming for new lows. So the USD ZAR is a sell on any pullbacks. Also, a very, very interesting pair to watch is the USD ruble, because as you see, I'm zooming out here, this has been a triangular consolidation, quite a prolonged one actually, since April 2017, and we're currently breaking to the downside. So I really believe that another move towards the 61.8, which is also that low there, that high there, somewhere, let's call it 49.50, is a very appealing trade, likely. So, you know, from a technical perspective, this looks quite good to me as well. The USD against the Singaporean dollar is also resuming to the downside. It has already broken to levels we haven't seen since the first months of 2015. So, you know, if you zoom out, you'll see that if we now draw the fib from there, next target is the 61.8 at 132. So I think quite a lot of opportunities in the exotics against the dollar. Are we going to see a reversal for Aussie yen and Kiwi yen? Okay, let's have a look at them, because I know that a lot of people have been trying to fade their strength, and sometimes, you know, with a good technical basis. I mean, Blake tried his luck, and I really liked, especially the Kiwi yen. I didn't participate, but I really liked it. I mean, if I was trading shorter term, I would probably have taken a trade myself as well there, because, you know, in many occasions, you are going for a good reward to risk ratio, and knowing that when you're trying to catch reversals, you're not going to do it more than 50% of the chances, but you're looking for a good return, so it's really worth it. So Aussie yen is now approaching a quite strong confluence of resistances at around 89. So I have to say one thing. After a move that took us from above 84 to 89, and given the fact that we are on a resistance, obviously the easy money being long has been made. I can even clearly see 5 waves up here, right? 1, 2, 3, 4, 5. That being said, we are probably rather closer to at least a pullback than anything else. So you want to try your luck being short, I get it, but definitely buying up here makes no sense. Okay. Kiwi yen, more or less the same. We're approaching also the 78.6 from the last move. We are in a very well-behaved ascending channel, which we're also approaching its resistance. So let's call it more or less a confluence here of the 78.6 and the ascending channels is resistance. So at least some short-term pullback. I think a pullback, let's say to 79.30 to retest this horizontal support area and the 200 EMA, is a very likely scenario. So the RSI, also the daily RSI being above 75. Bottom line, not the time to be buying these pairs. If you want to buy them, wait for a pullback first. Okay, let's see what the metals are doing. Silver is testing once again this confluence of resistances, but definitely we don't have like some kind of a strong move here or some kind of a strong follow through. What are my thoughts on DAX? Let's have a look at the DAX. I was afraid that the DAX is going to resume its uptrend. That's why I closed my shorts, and I even managed to book some profit, which, you know, given what followed, you know, was kind of a success. What can I say about the DAX? First of all, let me draw it here for you. First of all, this is,
You know, that's a perfect example, Steve, of one of my Pinkertisms. The difference between pros and amateurs are pros know how to lose, so they have money left to be right with. Nice out, Max.
thank you. This was a morning star formation for the DAX. It was also on a daily closing basis. It was also a perfect retest once again of a very important horizontal area. It was the breakout area from that high. There is nothing bearish with the DAX at the moment. So simply put, you know, unless you see a break below this horizontal area, you either are long or not participating. That's what I think about DAX. I was really hoping that we would, you know, get somewhat below here. I was looking for 12,500. That didn't manifest. So, you know, there's nothing that doesn't look bullish with the DAX. As simple as that. More questions. Euro Kiwi. Let's go. Euro Kiwi. Let's have a look. By the way, I see that the dollar is now somewhat strengthening once again, at least against the euro, against the pound, paring back some of its losses against the USD yen. So USD yen is almost at the highs, just 10 pips below the recent highs. So as I said, not really.
I can't fight this yen until bonds make new lows for the move, you know, really accelerate, get one more flush in the bond market, I'm thinking, Steve. And you're right, we are starting to get a tail on Aussie and the precious metals.
Yep. So Euro Kiwi, and an interpretation here with the Euro Kiwi could be something like this. Okay. Given the prior move lower, which if you go down to other time frames, it looks like a 5-way to me. I believe Euro Kiwi likely has somewhat of a downside left. Okay, let me be clear here. I'm not bearish the Euro Kiwi, right, in a medium-term perspective. I'm just saying in the short term, I don't see the basis of a strong rebound here yet. Okay, more or less, I would tell you the same with Euro Aussie, but I also need to respect here this ascending trend line that hasn't been broken yet. I have to say that the rebound from almost retesting it has been very lackluster. And it doesn't inspire me that we have found, you know, a low and are about to push to new highs yet. So be careful trying to time the bottom here. I don't really see the signs that we're there yet. Okay. CAD Swiss. Okay, we haven't seen that in some time, but sure. Let's go ahead and have a look at it. Okay. Yeah, the inverted head and shoulder scenario still looks good here because as you see, we came down, we retested. It's not a pretty one, I have to admit. This is not a pretty inverted head and shoulder scenario, but nonetheless, this is a head and shoulder scenario. I mean, it satisfies the typical rules of an inverted head and shoulder scenario, right? And we came back, we retested this horizontal area. It's also the neckline, and we seem to be moving higher. Also, if you look at this move lower in isolation, now that we've had more price action, there is nothing bearish with it, right? Very choppy, very overlapping, very slow. I think that the cat Swiss still looks very, very good to the upside, and it has a lot of room left. Just look where we started from in 2010, 111, 111.50, and we're currently below 80 cents. So I think this is a good trade. If Kiwi drops, what's your target? Okay, let's have a look at this, and and we also have a question about gold. Actually, let me start with gold, and I'll go back to the Kiwi. Okay. Let's see. Gold. Gold. I would expect gold, first of all, to make at least a corrective move lower from anywhere below 1337. So I don't believe that this move higher can resume for much higher than where we currently are. $15 more to the upside at the very, very, very maximum, in my opinion. And then I would expect at least a retest of the 1300 area. Okay, so that's what I see with gold for the time being. But gold's move has already satisfied my minimum requirements. So in all honesty, I would expect a reaction from lower than 1337. I'm just giving that as a very, as a very stretched target in the short term. So that's what I see in gold. And yes, the move has been, spectacular. Nothing less I can say about that. Now, if we get a reaction from anywhere here or there, actually, just look how Kiwi played. I didn't draw that over price action. I drew that before price action. For whoever is watching the webinar, you already know that. I would say that Kiwi should react from anywhere between here and 70 to 60. And I would at least expect a move back to 71 at the very, very least. If we go higher, I mean, because if we put on a reaction from here, I would most likely expect a move at least towards 70-30 to 70-50. Okay, so that's what I would be looking for at the very least, I said, because I still remain bearish in the medium term, these pairs, until proven otherwise. So I'm giving you some minimum targets, even if it proves that a pullback is just a corrective pullback and there is more upside left to both pairs. I mean, the Aussie and the Kiwi. So going back to the Aussie, since we mentioned it, having to do with the Aussie, I would expect test of the 77.40 area no matter what. And if we break below 77.40, that will enhance my view that perhaps that was just a very strong corrective move higher, because I still, despite the recent strength we've seen, I'm still not convinced this is a new move to the upside, a new bullish move. Okay. Let me see what other questions we have. EuroCAD analysis. Yes, that's an interesting pair to see. We'll see it. Hey, what do you think about natural gas? Or don't you trade that? I was thinking long term. Okay, we can have a look at it. I don't trade it. I have to be very honest. I don't trade it, but we had a look at it recently. What was it? And gas. What was the instrument that we did the technical analysis on? Natural. Was it this? Yep. Okay. Natural gas did a fake move of a potential triangle here, but it's okay because that trend line was not so solid. But one thing is for sure, that this trend line is important. So I would have to tell you that as long as we remain below this blue trend line, we still have no confirmed breakout for natural gas. We saw a very strong move higher here, but we're also seeing a very strong move lower here. Speaking about natural gas, and before I go to the EuroCAD, it's it's funny. You remember, Dale, what we talked about yesterday on crude, right?
Yes, buddy.
Just like half a day, like 2/3 of a day after we got that Bloomberg article, crude was trading almost $1 lower. So
yeah,
be careful.
That looks like that is it, except on the shorter time frame, I could see one more high.
Yeah, there is a possibility of one more high, and let's be honest, as I've said, I would even see it up to 63.30, which we have the 161.8. So in all honesty, a new high from here would not surprise me at all. But anywhere between where we found a high yesterday, so that might be it already, or anyhow up to 63.5, I would then expect a much stronger reaction to the downside. So I might even consider actually selling a new high. Let's have a look at the EuroCAD, by the way. Okay, quite an important break happening here in the EuroCAD. It's this horizontal area and this ascending trend line. So obviously, still remains too choppy for my taste, I have to tell you. I mean, let me take it oppositely. Why would you want to trade EuroCAD and not pick something that is weaker against the CAD? Because personally, I'm both bullish the CAD and the Euro. So I would not choose a strong versus strong currency trying to see which one is going to end up being stronger. So if you're looking to be short, I think that we're already doing an important move here towards this direction. But my 50 cents, you can find better instruments to be long the CAD. Dale, there's a question from you for you from Jason. Dale, 3 drives on Euro USD, he's asking.
We would need one more drive.
Okay, Jason. So you have one more drive missing. Okay, got it.
Yeah, we've had 2.
Okay.
So get this pullback and maybe one more push up, Steve and Jason.
Okay.
Good eye, though,
okay.
Jason. Good eye. Yeah.
Okay, very nice. So to recap and call it a week, the first week of the year, very muted reaction from the dollar, completely non-existent reaction from stocks, extremely good data for the Canadian, extremely good data from the Canadian. In my opinion, don't try to fade it. And I really think that you should be careful selling the dollar right now, right here. Okay. I think that you should remain, just personal advice, we should remain a little bit patient during the next few days and let the first few weeks of the year show us what new trends might be emerging. Okay. So it's better to start the year being a little bit nimble and go in with more conviction later on than betting on your luck and putting positions very early and perhaps finding yourself out of the money and then having the psychological stress of trying to recover since first month. So I don't know if you want to add something, Dale. You always have something to add, of course. That's
I'm just looking forward to having a great year with everyone, Steve. And last year, starting FACE and working with you, and now I feel we're really a cohesive unit, especially with the addition of Amanda and the chat room and all the improvements that you guys are constantly trying to improve the site. I would jump on this promo. You have 15 days, but don't be a procrastinator like me. The weekends are a great time to begin to familiarize yourself with the platform and get ready for next week.
Speaking about that, I want to say 2 things which is important before people leave. First of all, here's Amanda. Yes. And if you want to know more about Amanda, you can just on our public website click on here. And second of all, I want to share something with everybody. For whoever has been a member, you know that ForexAnalytix has been 2 pages. It's the traffic light page and the analysis page. So it's the analysis page that you can read analysis on every instrument, etc. It's the traffic light page that you can monitor things. And we have a lot of tools that go along with that. But now we have a vision, and except launching, we have a mobile application. Now we're going to be launching an iPad application within the first quarter of the year.
Wow.
Also, part of our vision, this is what's going to happen with ForexAnalytix within the next couple of months, within the first quarter. ForexAnalytix is going to become a single page for our users. Every window is going to be modal, so you will be in a single window. And if you have a multi-monitor setup, you will be able to drag sections like the traffic light page to devote a single page for them. So I think the new design is going to be even more functional, even more productive, and you will really be able, we're also integrating, we're switching to the investing.com calendar, and we're integrating a lot of functionality on it. A lot of new things are coming in the first quarter, for ForexAnalytix, because we're not only, a market analysis company, but we're also a tech company, and we really try and strive to, to offer the best possible product. We really believe in the idea that if you stop moving, you fall behind.
You're growing or dying. So yeah. We have a question from Brad. He bought a 1 month at the end of the year, right before the promo.
Can I still get 1 free month? Open a ticket for that. Listen, and that applies to everybody. If you go to our homepage or wherever you are on the site, you will see at the bottom right this intercom button. If you click on it, you can open a ticket, and we have wonderful people in the customer service, and they're always helpful. And they can tell you one thing for sure, and you can ask any of our subscribers, and they're not few, trust me. We're always doing the best to help you out and offer you, the best possible solutions and options.
Yes. I don't know what Abdul is saying. Did the NFP nullify the Aussie active pattern in play?
No, absolutely not, Abdul. The pattern in play has no, absolutely not.
Okay. Yeah, Brad said he bought it on the 28th to start his year off right, so that was only a week ago.
Brad, open the ticket, and I'm sure. I think Kate, Max, Sarah are currently on customer service. They're going to help you out. Trust me.
There's your testimonial, Steve. Robert saying great customer service.
Yeah, we're really proud of our customer service. I mean, all of them, they're absolutely excellent, honestly.
Okay, everybody. Well, thanks, Steve, for another great week. Looking forward to 2018. We're going to kill them. And again, in LAR on FX Street, we were the LAR Lions. Now we're the Face Eagles. So Face is a place where people come to become an ace and want to be able to soar like an eagle above the crowd. So have a great weekend, Eagles. Remember, don't just count your pips, count your blessings, and look forward to a full week, back to a regular schedule next week. So enjoy your weekend and look forward to collaborating with you and everyone next week. That's a wrap for me, Steve. And that's a wrap for us, Face.
Have a great weekend, everybody. Thank you, Dale.
You're welcome. Adios, my trading warrior brothers and sisters. See you on Monday. Okay, Brad.